Hi, it's Dwyer. Dwyer70905.substack.com, which has free memberships. This is a free video, as well as paid memberships. Let's talk about Terra, the collapsed stablecoin. Today is May the 22nd, 2022. But remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now let me just make a few points here with regard to the collapse of Terra. Understand it's very early in the cryptocurrency markets. The markets aren't mature. Folks, you should expect many more collapses. Many of these companies are going to fail. What I want you to do is to look back to the PC, the early days, when you had companies like Gateway, Commodore, Compact, Amiga, Palm, Tandem. Right, folks, they're no longer with us. There's going to be market consolidation. Understand, many coins will be built on faulty premises and will fail for that reason. Some won't be able to match the level of service provided by their competitors. Others will enter the market late and will miss out on the network effects. Right? Just keep in mind that markets are dynamic. Just like the bad restaurant in town is going to fail, many of these cryptocurrencies are going to fail. If you're investing your money, the burden is on you to figure out which companies have a shot at being successful or which DAOs. Let's make the conversation apply to crypto. Which DAOs are going to be successful and which DAOs are not going to be. Now, what I want people to realize is that before Terra and now after Terra, stablecoins are needed. Cryptocurrencies are market-based, just like stocks, right? The prices change every day. If you're in commerce and you owe someone the equivalent of $10, right? A static amount. You know you have to pay back your friend Joe $10 worth. Right? Then what you might want to do is to take a market-based asset that is going up and down in price, sell $10 worth, and then transfer it to a medium that's going to keep that $10 in value, regardless of whether the market goes up or down. Right? Just understand. What stable coins do is they allow you to lock in value. They perform a very valuable service. Now, sure, you could sell some crypto asset. You want to put the $10 in dollars, right? After all, you owe Joe $10. But if you're in the digital world, you first have to park the value of that asset, the $10 worth, in a crypto asset. It might be more convenient. That's where stable coins come in. The issue here isn't the idea of a stable coin, right? That's a valuable idea that serves a role in commerce, right? That helps facilitate transactions. The stablecoin idea is an excellent idea. Now, the issue is with what the stablecoin is backed by. Understand, the first rule of a stablecoin should be that the stablecoin is stable. If it's supposed to track the dollar, then ideally you want a stable coin that's backed by dollars in a ratio of 1-to-1. Folks, those exist. If you're conservative, if you don't want to play games with the stable coins in your portfolio, take a look at True USD. The website is trueusd.com. Right? Understand, there, the stable coin is backed by dollars, right? That are placed in a bank or vault someplace in a 1-to-1 ratio. So understand, when you have $10 worth of True USD, you have $10 worth of True USD. Market fluctuations are not going to affect it. We need to come up with a way to identify stable coins like True USD that have a 1-to-1 ratio with actual US dollars. This way, once you transfer $10 worth into True USD, you can go to bed at night knowing that you have the $10 to pay your creditor Joe. Now, currently in the crypto space, we don't have different names for the different stable coins based on their backing. We should. That will come as the market matures. But just understand, you do have stable coins out there that are backed 1-to-1 by the US dollar. Then you have riskier stable coins. Right now, the risk varies based on what they're backed by. So you have some stable coins that are backed by liquid debt assets, not just dollars, but commercial paper, right? Debt issued by highly vetted and ranked corporations, right? You have coins backed by U.S. treasuries, where people think, okay, great, this is a U.S. treasury. It has the full faith and credit of the United States government behind it. This is the same as holding a dollar. At least that's the thinking. So the idea is that these coins have approximately, and that's the word we'll use, approximately $1 worth of backing per coin or token, right? Whatever word you want to use. Now that's different than actually being backed by a dollar. Right now we're in the world of, well, this is backed by practically a dollar. Right? Commercial paper issued by IBM. How's that going to lose value? The thinking goes. Right? Now just understand, coins like this, coins like Tether, USDT, have more risks than a stable coin like True USD. Well, then we get to Terra. Right, folks, understand Terra is what was called an algorithmic stablecoin. Terra was backed by the kind of volatile assets that are inherent in dealing with algorithms. Now it got depegged from the dollar. What that means is that what people thought beforehand was $1 of volatile algorithmic assets turned out to be worth less than $1. So folks were transferring, let's say $10 into Terra. Actually, the number's much higher than that, as you could imagine. And they thought to themselves, okay, great, I have $10 parked here that I could then convert to fiat currency and pay my creditors with $10 of fiat currency. And of course, these people came to find out that the $10 they parked in Terra dropped to below 10 cents. Right, folks? Terra, of course, fell apart. A lot of heavy hitters in cryptocurrency believed in Terra. Right? I'm an investor in Galaxy Digital. Its head honcho, who's very savvy, Michael Novogratz, believed in Terra to the point where he got a Terra tattoo on his shoulder. And it's big. Right? The lesson to be learned here is to know what you're investing in. The lesson is not that stablecoins don't serve a valuable purpose. They do. No, the lesson is know what your stablecoin is backed by. If it's backed by dollars in a vault, okay, great. Your stablecoin will only lose value if the dollars lose value. If it's backed by dollar equivalents, in other words, not just dollars, but commercial paper, understand that's much higher risk. What we view as a bulletproof company today might not be bulletproof tomorrow. Right? History is replete with companies dropping 40% in value in a year. Right? Companies having bad accounting, fraudulent accounting, like Enron did, and actually folding up, falling apart. Commercial paper dropping in value. Right? Be aware of which stable coins those are. And finally, let me just point out the obvious. If you're dealing with algorithmic stable coins, understand the risk is far greater than if you're dealing with a stable coin like TrueCoin, where the match to the dollar is 1-to-1, where you actually have true USD, where you actually have dollars in a vault that equal the coins on the market. So yes, Terra fell apart. Terra had much more risks than a stable coin with actual dollars locked away in a vault. Understand, Gary Gensler, the head of the SEC, openly talked about regulating stable coins before Terra blew up. The risk was obvious too. Very sophisticated, savvy investors, at least some of them. Right? And so understand the market is going to correct itself. Terra is not the last explosion. I fully expect, as the stablecoin market evolves, people are going to start using different terminology. You're going to realize that a stablecoin backed by dollars in a vault is different foundationally than a stablecoin backed by commercial paper. And we'll realize that both of those coins are different foundationally than algorithmic stablecoins. Right? When you're in the early innings of what appears to be potentially a promising market, you need to expect market consolidation. Right now, we have thousands of cryptocurrencies. Right? Just understand that the majority of them are going to fail. Understand, cryptocurrencies are failing every day. And I'm a crypto believer. So that's where you need to, before you invest, not just listen to the promises of the person trying to sell you the coin, but you have to also think about the sustainability of that coin. You have to figure out whether that coin ultimately, if you're an investor and not a trader, is going to be viable long term. I've had conversations with people where they're trying to sell me on Shiba Inu, and coins like that admittedly had periods of explosive growth. And when I start asking questions like, what makes this coin unique? Right? Is this coin just a coin that is being traded on momentum? Or is there some fundamental use case? And is the way the coin is structured able to sustain itself? Right? Often the person trying to talk to me about the coin loses their way in their own narrative. Right? You have a lot of well-meaning entrepreneurs out there with provocative ideas like algorithmic stablecoins. I need for those of you who are seeking to invest, who are using stablecoins for the stability, to think about what the coins are backed by. If it's anything less than dollars in a bank, then you're taking on added risk. That's how I see it. Let me hear from you. I hope you leave your comments in the comment section of this video, which will be posted free of cost at Dwyer70905.substack.com. Again, that's Dwyer70905.substack.com. And for those looking for stablecoin, that's backed one-to-one by actual dollars. Take a look at TrueUSD.com. That's TrueUSD.com. Thanks for stopping by.